when we first got to school, like I knew about credit cards, but
Right.
bro, you remember freshman year, my freshman year, your sophomore year, bro.
Everybody, they got 1,000 people out there. Hey, apply for this credit card. Apply for this credit card.
Man, I go down to the Tate Center. It's the second, third week of school. I just want a Georgia T-shirt. They was giving away free T-shirts.
Right? They bake. They know how to bake. You're like,
Yeah.
oh, a free shirt,
So
sign up for a credit card. But then you don't understand how a credit card works because it's just like anything. A credit card necessarily is not a bad
yeah,
thing. It's a tool, right?
yep,
Just like a gun, like a knife, like a pen, like the tongue. I mean, it can be used properly. If someone is charging something, they pay it off. There's a lot of benefits. You pay it off as soon as you charge it within that month. You're getting points. You're establishing your credit history, but you don't learn about all that stuff. And what happens is you just like, oh, this is like free money. But you don't think about the interest, the loan, how
bruh.
much
When
it
I
is,
got
and
that,
then I'm talking about advances, pay
when I
advance.
when I got that first credit card, they gave me, I think I got $1,000 limit. Everybody,
Oh,
hey, listen, everybody got something for Christmas. Everybody.
It's the guys on the street, but the topic is heat. CG Law give them truth, and Coach I give them facts. And Coach Gray know he ain't even gon' play. Got no action today, a new season today. About to start a new wave. Send requests, we gon' chat about your sport. Send requests, we can talk about more. Got just what you want, come take a tour. Got just what you want, come take a tour. We don't guys down the street. We don't guys on the street. We don't guys that's gonna eat.
All right, welcome back into another episode of Guys Down the Street. It's one of the local dudes, your host Isaiah. We're gonna start to talk about some generational wealth. I think a lot of times in the black community, we hear the words generational wealth. We think you got to have millions or hundreds of thousands of dollars. It's one of the biggest things that keeps the difference between different races is the wealth gap. So creating generational wealth can start small and then do a snowball effect. And you may not see the benefits, but at least your grandkids or their kids may see the benefits. And with that said, we're going to bring in a special guest. It's one of my closest friends. We met in college at the University of Georgia. He now owns his own State Farm agency. I'll bring him in, Mr. Kermit Walker. What's going on, KC?
what's going on? Appreciate you having me on, bro.
Hey man, I finally got you on in the neighborhood. You know what I'm saying?
Sure.
So man, we talking about the generational wealth. What you think? What you think the overall perception, in the black community is when somebody says generational wealth?
I think the overall perception is it's kind of like what you were saying. It's like, okay, it's this big amount of money that I have to have, and it's just too big. So you look at it and it's so large that you're like, that can't be me, or I may not even get started because the number's so big. I have no idea how to get started, where to get started, or that just is going to be too much money. So I'm just going to not even get started.
Yeah, and it's like, and I hate to say it, but a lot of times when it look like a lot of work, a lot of us won't do it. You know what I mean? Or if we can't see immediate benefits, I think that's a big thing with generational wealth because it's generational. You know what I'm saying? So not all of us can be LeBron or the Tesla dude or whoever it is. But we could start somewhere, and at some point, somebody has to take that step. It's kind of like fighting for your rights. Like Rosa Parks didn't get to see reap the benefits of her rewards. You know what I'm saying, or her struggles, or whatever. Or the Rockefeller, he might not have seen all the benefits, but all his, family now they reaping all the benefits. If I'm not mistaken, right. Walt Disney did, and all his family got money.
Yeah, it's definitely a mindset, and it's one of those things where there's got to be some delayed gratification. Like I said, it's not going to be necessarily immediate. Like you may not see the exact benefit, but there has to be a sacrifice, and it has to start with somebody. And that's just the biggest thing. Someone has to say, okay, you know what, I'm going to sacrifice, and then because of that, it's going to snowball, as you said. The next person will understand, and the next person, the next generation. And so you just build upon it, right? So this whole idea, this whole mindset is saying, okay, nah, I just can't do that. That's not going to happen now. Why do I need to, withhold from today? And like I said, that's just a different mindset.
Exactly. And I mean, it's just about getting started. I mean, it's kind of like losing weight. It's like just get
Exactly.
started somewhere. Just get started somewhere, man. Like
Right.
it ain't got to be perfect. It ain't got to be what the next man is doing, but if you start somewhere, that's better than dying and leaving your family with a whole bunch of burden. I know when we think about dying, we think about, okay, well, let me get a burial plot. Let me save up enough money for the funeral expenses. But I mean, there's a lot more to living once you leave this place for your relatives that you leave behind. For instance, the two things that I wanted to focus on today is home ownership and life insurance. Those are two things that I think every American thinks about here at some point in their lifetime. They might not think about the other depths of generational wealth, but home ownership is huge. I mean, you think about how long it took us, as Black people to even be able to get anything without what they had the redlining back in the day where we could only get houses in certain neighborhoods, and then of course once we moved into neighborhoods that actually devalued the house. But that's one of the things that gets other ethnicities back in the day ahead of Black people is land and property. And so home ownership, I know a lot of people say, I even looked at this thing last night. Dave Ramsey was talking about renting versus owning.
Owning.
And,
Okay.
yeah, and he was like, just because the mortgage is lower doesn't mean you necessarily are saving. And I get that because there's a lot of stuff to home ownership. You got to pay
Mm-hmm.
your taxes. You got to pay your
Insurance.
homeowners insurance. You gotta and that can go up. Things like that can go up. You got repairs, things of that nature. But at some point, that should be a goal if you're trying to leave something to your family.
Right. And like you said, I mean, there's a lot of things. If you look out throughout history, that's the reason why you have the Fair Housing Act, to try to make sure that everything is equitable. But you even look at probably like you and me, like my parents, they were the first in my family to kind of own a house. And then now, second generation, I own a house. But you look at typically what can we leave to the generations behind us? I always think about the song, The Temptations. You got that line in there. Only thing dad left us was alone, right?
Yep.
And you're like, when you think about what a lot of times families are left with, it's either going to be one of three things typically, and that's going to be debt,
Mm.
gift, or inheritance. And a lot of times that's just debt,
Yeah.
because they haven't even properly planned. Like you said, you were talking about, we think about life insurance, but if you look at, and I was just thinking about this the other day, if you look at GoFundMe, like year in and year out, one of the number one reasons that you have GoFundMe is people haven't properly planned for life insurance. And there's nothing there. So they're like, okay, hey, how can we raise money? What can we do? And like
Yep.
you said, you look at generations of, people that were renting, but what if someone owns their house? What if you can pass that house down? What difference does that make versus you have that child coming into a situation where they're not taking out a loan, they're not paying that interest.
Mm-hmm.
They already have homeless in place. Yeah, there's going to be maintenance. Like you said, you're going to have some maintenance. You're going to have some taxes. You're going to have some homeowners insurance. But what if you're removing out of that the fact that they don't have that monthly payment, they don't have that interest, and so that's going to put you ahead. That's going to put that child in a position that the generation before, they didn't have that benefit.
Exactly. Like for you and I, we have homes and currently paying on them. But once we pay them off, if our kids want to move into the house after college or military, whatever they choose to do after high school, and we gone, in their adult life, they can either live in it and now that's a bill that they don't have to incur, or they can even sell it. And now they're starting ahead of the game. What I'm saying? Like,
Or like, hey, another thing, they could even rent it out.
or rent it out. And now they have a income stream that they don't even have to. I mean, you still got to do some work with it, but that's not something like an 8 to 5 that you got to go into. And then if you're fortunate enough to have multiple properties, now you're leaving more chances. Now they may stay at one and rent one out or rent both of them out, whatever they choose to do. And that's why I say I don't think we think about it in those terms. It's like I think we think about buying a house, but I think we think about buying a house because we want a man cave and
Right.
You know what I'm saying?
Well, maybe I'll find whatever.
Exactly, and it's like, but and you don't want to. You getting tired of the landlord hiking up the rent. You think about it like that, but you don't think about it like, okay, if I get this and I pay it off in 15, 20, 30 years, whatever you do, now your kids, like, you when we came out of Georgia, think about if you just went straight into the workforce and you had no rent mortgage,
Right. I
bruh.
mean, because you got to think about this. One of the biggest bills or expenses that you have is what?
Mortgage.
Yeah, your mortgage, right? So just say if we're taking that off the bat, and then I always think about this kind of like this. If you have one home, it's going to be easier to get another home. So let's say you have one home, and then like you say, you get another home that could be a duplex, a fourplex, whatever. You may want to live in that. You're getting rent from the other one, and then you may even move up to apartments. I mean, once you learn and understand, the opportunity, it becomes endless. And you got to think now. Somebody may do that. They may want to do that. They could get a situation where they're doing that like every year, every other year. But if nothing else, what if you're doing that every generation? You're doubling every generation. Like, okay, I have a home. Next generation, now they got two homes. Next generation, but you could do this. I mean, every other year. You can do it every year. It just depends, on how the finances work out.
Man, I seen a post on Facebook, man, yesterday. Somebody posted that, I want to say it was in 1968, maybe 1969. The percentage of black people, as out of the whole number of black people that that are homeowners, is less now than it was in like 1969, bro.
Really?
Like out of all black people, yeah, not like as compared to white people, but just out of all, I think it was like 41% then, and versus like 37% now. I was like, wow, man, it's like we regressing or standing still. It's like what's the problem?
What do you think is the biggest cause of that?
Oh no, man. I think some of it is the fear of what comes with owning a home. Like the repairs. Like people like the fact, especially in an apartment. Oh, you ain't got to cut no grass. You just call. I'm gonna be honest. Like I like for my grass to look good, and I'm gonna do what's needed. But I ain't saying that's my favorite activity. But I think some people like the fact that they could just call the repairman. It's a burden that you don't have to worry about. If I like, if when the water filter goes out or it's time to replace in my refrigerator, I gotta spend that $40. You know what I'm saying? Or or like I had the dishwasher wouldn't start because the lock mechanism was messed up. So luckily it was under warranty, but I would have had to take care. I think people just don't want the headache a lot of times until maybe it's later on in life, and now it's kind of like my mom. My mom, I'm actually glad. My mom just told me she about to get a house. Like but it was almost like she had to be in the right space for it, but I couldn't blame her because she had rent control since we was in college, bro. So, and her landlord, he was a good dude, man, and he recently passed. And I think he passed like 2 or 3 years ago. And then now, now the kids got the house. Like you said, he left them their property. And now that, they want to, I guess, get more out of it. He was like one of those guys, he grew up in the old school, like you do for me, I do for you. Don't worry about no deadlines. As long as you pay the rent, I'm good. Like literally, my mama paid the same rent from 97 to like whenever he died.
Okay, that's rare.
Bruh. When I tell yes, so in that instance, and it wasn't as high as regular rent. So he just like he took care of my mom. Like they was like real cool. So but now they hit her with we gotta raise the rent and things like that. And my mom like, you know what? She tried to offer to buy the house, but they want to rent it out, which on their part financially is if I'm pretty sure long term they can make more money renting it out than selling it. But yeah, she told me she went and talked to one of her sisters in Christ at church, and she's a mortgage broker or whatever, and she about to do it.
Now, see, one of the things I was wondering, one of two things. One, was it a situation where they saw in the study or something like that where more people are staying at home, and then a lot of times, maybe those first families, they were renting or they had to do a second mortgage, and then the kids are still at home? Or was it just a simple fact of education? Because if you look at trends, I think I saw one day like the number of kids that are dropping out of high school has increased.
Yeah.
Especially around brown and black.
Yeah.
And so you got to think now. You don't have to have necessarily education to be successful, but let's just say more people dropping out of high school. They're going with a lack of that education. Does that also translate to financial education and literacy? And so, do they even know about what it takes or what I need to do to get into a home? And then another thing is it a credit situation?
I think a lot of it is the credit situation because we're not. It goes back to what you just said, financial literacy, and not just black people, but overall in high school, I think they should teach credit, like at least the basics of credit, like how it works, like not how to manage it, but at least like how it works. You know what I'm saying? Because when we first got to school, like I knew about credit cards, but bro, you remember freshman year, my freshman year, your sophomore year, bro.
They got 1,000 people out there. Hey, apply for this credit card. Apply for this credit card.
Man, I go down to the Tate Center. It's the second, third week of school. I just want a Georgia T-shirt. They was giving away free T-shirts.
Right? They bake. They know how to bake. You're like, a free T-shirt.
So
sign up for a credit card, but then you don't understand how a credit card works because it's just like anything. A credit card necessarily is not a bad thing. It's a tool, right?
Yep.
Just like a gun, like a knife, like a pen, like the tongue. I mean, it can be used properly. If someone is charging something, they pay it off. There's a lot of benefits. You pay it off as soon as you charge it within that month. You're getting points. You're establishing your credit history, but you don't learn about all that stuff. And what happens is you're just like, oh, this is like free money. But you don't think about the interest, the loan, how much.
When I got that,
talk about advances.
When I got that first credit card, they gave me, I think I got $1,000 limit. Everybody, hey, listen, everybody got something for Christmas. Everybody. Maze, my boys back to the house, Maze, Dreek, like everybody back home, my brother, everybody. I wasn't just buying like $20 T-shirts. I was getting people gifts. You hear me?
Like you said, there's no restraint. There's no not behind it. It's just like, hey, you know what? I want it immediate. I see it. I charge it. I got it.
Yep. And I knew that that of course to give me this money I got to pay it back. You have to pay it back, but you don't understand that even if you pay the minimum payment, now that balance that rolls over is that interest rate. You know what I'm saying? So now they charging you. Your interest might even be more than your minimum payment.
Right? Yeah. I mean, it's so big. It's such an exorbitant fee. It's like, man, so you're looking at it, you're paying a minute fee, but after a while, that interest charge gets up, and guess what? All the time, your credit is going like this because access to credit and how you pay it back and the amount that you have that's available, all that has an impact in that overall credit score. And you're like, I don't even know what a credit score is at that time.
And then, back to what you was asking about why we're not getting home ownership. Credit being the problem, it ain't always bad credit because you messed it up. It's bad credit or no credit because they don't, like I remember when I first got there and you was telling me like your dad had set up a bank account, for you, but he was on it, to kind of help guide you when you first start, you know what I mean? Like,
which is crazy because like he dropped out of high school in 9th grade to help support the family and he went to the military, but then he learned, but it took time. Yeah. And that was a big important thing to him. But like you said, that was big because that helped.
Yeah, it helped you. At least if it didn't do anything, it taught you that you need to be aware. You can't just roll out here, spending 70% of whatever you're making as an RA.
Right.
Or, things like that. So
more than we make it.
Yeah.
You know what I mean?
We definitely spend more than we making. Spending not even more than we making, but spending more than we need to survive. Like, if you making, I don't know, you're making 40,000 and you living off, you're spending 37. You have no room when you need tires. You need tires.
Right.
Car broke down. Now you're like, what I'm gonna do? Oh, let me hit that credit card. I heard a lady say if you pay off your credit card, like she was talking about the stimulus that some people got. She was like, don't go out here and use every single penny to pay off pay off debt, because what happens when you pay off that card, you still in debt technically because it's a zero balance, but you ain't got no money now. And so when your car break down, what you gonna do? You're gonna pull the credit card back out. So she was like, pay some of the debt, make sure you on time with stuff, but pay some of the debt, and then start a emergency fund, because
Okay.
a lot of us don't have the emergency fund, and when you start thinking about a lot of that, some of that might be overwhelming, and people are like, you know what, man, I just stay in the apartment. I ain't got to worry about no repairs. You
Gotta
know,
think about all.
I ain't got to think about none of that. And then it come to, later on in life, we start thinking about the end. And then we
Right.
like, okay, who gonna pay for the funeral? Who gonna pay for my hospital bills when I get older? Who gonna pay for things like that? And we'll know about, like, some of us invest in 401k, some at work. Some of us don't have the option, or some of us just don't want to get that money up. But then you start thinking about life insurance.
Right.
Now, a lot of people, they know about life insurance. They know about whole life insurance, and term life insurance. But a lot of people don't know about universal. They don't know what it takes. You can't. It's good if you say you want life insurance, but what you taught me, since you've been in the insurance game, is just because you know and you want it, don't mean
Right.
you gonna qualify for it.
That is true. That's a big, I guess, misconception. Like, you may get to that point, and you're like, you know what, I want it, but like you said, that doesn't necessarily mean it's not a guarantee just because you want it. And I even had a call the other day, with a lady like that. And there's some things that can prohibit you from getting life insurance, but a lot of people don't think about that. They're just thinking like, oh, okay, I want it, I can automatically get it.
So what could keep you, before we go into whole and term, before
Okay.
you even get there? So now I say, all right, KC, man, I'm trying to do better. I need to get some life insurance, regardless of what number I'm thinking or whatever. What does it take for me to qualify? What factors are taken into consideration to qualify for life insurance?
All right. Well, one of the first things they look at, one of the first things they're going to ask you, what is your height and weight?
Okay.
Okay.
So now health is coming into play.
Health is coming into play. Now, you and I have talked about this before. We know there are some of us that are larger than some, right?
Yep.
And there's some that aren't. But you got to think about that. So what is your height and weight? If you have a certain height and weight, they don't give us the exact, because they don't just tell us exactly, but let's just say you're a certain height, you're only so high, but you weigh so much. That could be automatic declination just based on that.
Okay.
I had a situation, where someone was like, really short, but their weight was really up, and they automatically decline. And it happens more times than not. And that's one of those things that's tough. We even see how, sometimes that has even impacted things like COVID. But so height and weight, that's going to be one of the things that automatically,
And
what is the health?
And though they don't tell you exact numbers, is there like a range? Like, let's say I'm 6 foot, and they say, okay, because I think you told me that, depending, like, let's say currently I'm 6'2".
Okay.
If I'm 6'2", 180, which is the, standard,
Right.
I probably would get a better
You get a better rate.
than if I'm 6'2", 250.
That's correct. So they don't give me the exact, because they don't tell you the exact, but I will tell you, like you said, let's say you're 6'2",
Yeah.
and you come in at 190, you may get one of the best rates, because they have different classes. They're going to give a preferred, they're going to give a standard, they're going to give, where they kind of add a little extra to it, and then there's going to be an automatic declination. So let's say you're 6'2", 400. You probably going to get a decline, right? You 6'2", 250, you 6'2", let's say you 6'2", 300. It may be a little extra, you know what I mean? But they don't tell us. But like I said, there definitely is, you're going to fall in that spectrum. You're going to get a better than, you're going to get a standard, you're going to get a little bit more, you're going to get a declination. So height and weight is that's one of the first big ones.
Okay. So now I decide I want insurance.
Okay.
I'm in the acceptable range for my height and my weight. What is the next thing they look at?
Through it either way, because we don't know until it comes back from underwriting. But they look at height and weight. That's a big thing. Another thing that's going to be a factor, are there medical conditions?
Okay. Now, with the medical conditions, is that like certain medical conditions depending on how old you are? Like, I know the older you are, the more, at least common sense would say, if I'm 60 trying to get some life insurance, then my medical conditions mean more trying to qualify than it does if I got something going on if I'm 21.
Right. I mean, it all depends on what the actual, medical condition is. Let's say you had a heart.
Okay.
Say you had a heart attack. I had a guy had a heart attack. I want to say he had it like early 40s or late 30s, right? So
Okay.
he's gonna get come back, and that's gonna be better than if he had a heart attack at age 70 or 60, looking for insurance, right? But every condition is different. There's gonna be some conditions that you may not be able to get at all. There's gonna be some conditions just depends on what is the level. I had a friend, we were able to write her luckily for lupus. She has lupus, but it depends on what stages she was at. We also maybe somebody with diabetes. Are they type 1, type 2, blood pressure? Are they diet control? Are they on what's the milligrams? So it depends on what the condition is. There's going to be some, may not be able to write. They were just diagnosed with cancer. And so that's one of the biggest mistakes or biggest things I also see too. Sometimes people wait too late. And you can literally wait too late, and that's the ultimate end, which is you die, you waited too late. But sometimes you wait too late, and as you get older, we're more susceptible to health conditions, right?
Yeah.
So, that's going to be one of those things that is a big thing that I always tell people, you don't want to wait too late because now you have more likely to have more health conditions, which could prohibit you from getting it. So height and weight, health conditions, and one thing that could impact it is going to be things like drugs, tobacco, even imprisonment. That could be a factor. Those things could factor in.
So if you have a criminal record, even though, let's say you trying to get insurance at 35 and most stuff before 21, somehow, some way you can get it expunged. But let's say you was 22 and I don't know, you went to jail for, I don't know, DUI.
Possession or DUI. Anything.
Yeah. And that can affect whether or not you get insurance?
Yeah,
wow.
It can affect. So you could have a DUI, and I had a young lady, unfortunately, she wasn't able to get life insurance because she just recently had a DUI. So things that it can impact that. Like I said, let's say you're in prison. We have friends that we grew up with. Let's just say they went to prison. That just depends, right?
Yeah.
So it depends on how long they've been out, how long. Because you got to think, insurance companies are going to look at risk. If you just came out or you're just on parole for a year, there may be a likelihood that you may be a repeat offender. But like I say, you've been out, let's say 5 years, that may be less of a risk. So those things all play into it, drugs, alcohol, like you said, imprisonment, DUI. Even, on the other side, it could be what's your lifestyle activity? Do you like to skydive? Bungee jump? There's people that do it. I had a 70-year-old lady, and she was like, I like to skydive. You have situations, you have vehicle racing. You have people that, let's say, they fly.
I was about to say, like an athlete,
right.
Their insurance has to be, especially like, football players with the CTE and NASCAR drivers, hockey players. I would imagine that their premiums are higher just because of the work that they do. Firefighters, policemen for that matter.
I mean, there's a lot of factors, But like I said, the main ones are the ones that we mentioned earlier. The height, weight, medical conditions, and then, like I said, smoke. Some people they're going to see a different rate depends on if they smoke versus if they don't smoke. Marijuana, all that stuff.
Well, we was talking about why some of us don't have life insurance. Not just because we didn't know about it. For those that know about it, but I don't know the numbers, but they say there's a high number of black people that have diabetes.
Right.
So now you talk about the qualifications with health conditions. So if you don't already have insurance and then now you got diabetes type 2, type 1, whichever one it may be, and you go to try to get insurance, then is it a possibility that you still can qualify even though you have health conditions?
Oh, yeah, definitely. I mean, we still have people that qualify, but like I said, keep in mind, it's not an automatic. There's certain conditions that are, but a lot of people get insurance because here's another thing, hypertension. A lot of times that runs in our community.
Right? Yeah, high blood pressure.
Right. Yep. So that doesn't necessarily prevent you from getting life insurance, but it may mean that your rate is going to be higher. Right. Okay. So I always tell people, and I try to say, okay, hey, if you can get life insurance at work, take advantage of it. It's going to be pennies on the dollar, but that should just be icing on the cake. You want to make sure that you have something that you own yourself, because what happens, guess what, with that job? What happens if you lose that job?
You're right. And I didn't even think about that.
What
Some
happened?
of us might not reach out to get external life insurance because like my job, for instance, my job gives you 1.5 times your pay. Automatically it doesn't come out, and then you can add on, and then people are like, yeah, well, I got it at the job. I got it. I mean, honestly, personally, when I was at Verizon, I was like, I got it at the job. I need to get more insurance. But like you said, I'm not gonna be there. I may not even be there. 30. Even if I'm there for 30 years, then I retire. Once you retire, it's over.
Guess what? What condition are you in at the time you retire? How much?
Yeah.
How much does insurance cost at the time you retire? Let's just say if you were perfectly healthy. I mean, versus you were 20, you're healthiest. Now you're 65, 60. Every year insurance goes up.
Yeah.
Okay, because every year you're closer to dying, and that's just a reality. There's one thing that's for certain. You know what I mean? I haven't seen the person yet that's made it out of here. You know what I mean? Living.
Yeah, I know, right?
So every year the insurance is going to cost more. But if you waited that whole time, then what do you have? And most companies, they're not going to give you a package to where you have insurance when you leave.
I got you.
You're pretty much in that situation where, okay, what does your family have now? Whereas you could have handled that early. But here's another thing. You also have the health condition. So it's going to be expensive. It may be too expensive. What's the money? Right now, when you're in your 20s, 30s, 40s, 50s, you're making the most income you're going to make. This is a perfect time to pay for it,
Yeah.
But now you're going to be on a set income. So I always tell people you want to get it extra outside of work because you own it. You have control over that. Then on top of that, another thing, hey, even get it for your kids because like you said, what happens if they get health conditions later? We hopefully are teaching and helping our kids with balancing that. But we know, hey, sometimes, I don't want to say it's hereditary, but you see it oftentimes, maybe we don't change it, thinking maybe it is hereditary, where it's more likely to run in those families, those things that you mentioned, diabetes and, hypertension. So what if we get some for our kids earlier, lock it in? They always have it. And we have policies like that. They can pay it off. They can own it, have it their entire life, and they're good. But, sometimes we don't know that. We don't think about that. And then it's like, okay, we get to, like you said, we're retired, or we get laid off, or, hey, maybe you weren't getting along and you got fired.
That's right. Now, what you said you can pay it off, and then now you got that policy for life. It brings me to ask you about the differences between term life insurance, whole life insurance, and even possible universal. Because I know every person is unique. But there's a lot of nuances that goes into all, even term. You can have different types of term. You can have different types. So what's like the basic differences between term and whole life? Because I'm gonna tell you something that I've been hearing lately. I got insurance through you.
Yeah.
We had this conversation. Yeah. Hey, shout out State Farm. Is it Tequila? Is that how you say it? Tequila, Georgia. We'll and before it's over, we'll let you state where you at and how people can reach you so they can reach out because he may not be able to do auto insurance outside of Georgia, but he can do it life insurance for South Carolina.
And I'm looking at maybe even extending because like I said, adjacent states. But yeah, that's a whole nother story.
All right, so what's the biggest difference? Because a lot of our people, they be like, man, I'm telling you, don't do term. Don't do term. That's just do whole. So but they don't know why. It's somebody else told them that. And so you know how we do. We'll hear something now we the source. Now we the source.
The ones that know, right?
So what's the biggest difference?
Well, first let me say this. I'm going to tell you, and this is what I tell most of my clients. I encourage majority of my clients to have both. Okay?
Yeah.
So I'm going to first say that. I'm going to put that out there. But every circumstance, situation is different. So you have to talk to that person. And then, you also have to look at budget. But I say just have something. Let's start with that. Because there's not a bad one. So some people say, oh, I don't do that. There's no such thing to me as bad life insurance. Okay. Like I said, they all serve different purposes. It just depends on your particular situation and your budget. So here's the biggest thing. There is term insurance. And most people are familiar with term insurance. That's the one that you have at work. It's like a group term insurance. And you were talking about this earlier, your employer is going to give you 1 or 2 times. How they come up with that amount, we don't know. But that's a whole other thing why you want to have insurance outside that because it may not be enough. You want to determine how much that is. And we can talk about some of the ways to determine that. But you have term and you have what we call permanent insurance. Okay, term, most people are familiar with. Like I said, that's the one you have at work. It runs for a certain term or a time period. Most common is going to be like 10, 20, 30 years. After that, the policy could end, or it just depends on the company and the type of policy. It may be automatically renewable, okay? But it's going to renew at whatever age you're at, so they're going to take that into account. The other one is permanent. Permanent is what falls under what you were saying, whole life insurance. Whole life and universal, all that falls under permanent. Permanent is just that, it's permanent. As long as you pay the premium, it's going to last forever. But we do have different types in there. Like we have types, like I said, where you don't have to pay it for your lifetime. It is going to be paid off. The thing about whole life is that it has cash value in it. So you pay into the policy.
Okay.
You have access to the cash, which is a good thing because, you can access that later. That can be, and what I tell a lot of people, especially for kids, that could be the start of your emergency fund, especially if you aren't good at saving. You can have the benefit of savings and coverage because you have that in a whole life policy. And a whole life policy has a lot of different advantages. It's the money that you put in, as you're putting money, it's going to grow tax deferred.
Okay.
Now, here's the thing about both of them, term and whole life. The benefit, when it's paid out to the beneficiaries, it's tax free. Now, there's not too many things or situations that you can think of where something's tax free. So that's things like why, more people don't look at it, or get it, because guess what? It's tax free. You're not going to find too many things that are tax free.
Not a lot of stuff is the government trying to get their part of everything.
Right. See, I would say one of the things is you look at a lot of companies, you look at a lot of wealthy, they know that, right? So if you look at some of the biggest industries, banking, everything like that, they put a lot of money into life insurance. Okay. And there's a lot of wealthy people that put a lot of money in there, like I said, because guess what? When that benefit is paid out, it's tax free. But not only that, you have access to cash value, so you can become your own bank. But that's like when you start doing even a whole nother level, because the money you put in, you can get to that money with your 401k or something like that. Can you get that money without being taxed? You might can do a loan, but, and then if that's paid out to your beneficiary, that's going to be taxed.
Yeah, and if you do a loan on your 401k, while the loan, even though you're paying yourself back and you eventually get that amount that you took out back, while that money's not in there, it's not making any money.
Right.
So you don't make any interest. So if you got a loan and you pay it back within a year or 2 years, that's a year or 2 years, you're not earning interest on that particular. So if you had $50,000 and you took out a $10,000 loan, now you only earn an interest on $40,000. That $10,000, until you pay it all back, you're not earning interest on that. And I don't think people think about that.
They don't think about that. And like I said, there's pros and cons to each one, term and whole. One of the things about whole, that is another pro, and why some people may say or they may not know. Guess what? The thing about whole, how many things can you think about that appreciate in value, right?
Home,
a home,
land.
But this is one of a whole lot of policy that can appreciate in value. But there's a lot of things, and we were talking about this earlier, that you can spend your money on: clothes, food, alcohol,
entertainment, whatever the entertainment, your choice.
But cars, a lot of that stuff depreciates, right? Yeah. So, there's pros and cons to everything, but it's going to be more expensive. The whole is going to cost more. That's one of the things too that you got to think about, right? So initially it's going to cost more. Over the lifetime, you will see it kind of balances out.
Okay.
But the thing about it, like I said, I like term and I like whole life. And like I said, I have both, and I have reasons. They serve different purposes for me.
I got you. And now with the whole, when you see the amount, whatever that amount is, normally, like you said, it's more than term. So when you got somebody, I guess, just whole as itself, I just came into your office and I say, Kermit, I want some insurance, and you tell me about the term and the whole, and then I say, man, that whole, I don't know. So how do you, not being just like a salesman, because all insurance people are not salesmen like that. Right. It's just that you trying to help the actual customer, so how do you aid them in making that choice?
Well, I talked to them about a couple things. First I say, okay, what do you want this to do? Right?
Got it.
What's most important to you? And when you start thinking about things that are important to you, people are first thing most people say, if I were to ask you just like this, what's most important to you, Isaiah? What would you say?
After God,
Yeah, after God.
my family.
Okay, so most people, no one answers family. So they want to take care of their family. Okay, let me ask you this. If you were not here tomorrow, what would happen to your family?
Well, they'd have to, when you just think about financially, now they gotta pay, yeah, pay my taxes,
Right?
that I may owe, even if it's from 2021, that they gotta pay for a place to stay. Now they lose my income,
Right.
you know,
And guess what? What's the most important asset that you own?
the house.
That's what most people say, right? And that is the most important asset that you do own. Now,
But
what's your most important asset?
me, I
Yeah,
guess the job,
right,
because I bring income in.
right. So just imagine, right now, you got the little man, right?
Yeah,
Just imagine if your income isn't there for 10 years.
yeah.
What does that look like? I mean, even for the basic necessities of groceries and things like that. So
Hmm.
that's going to make a difference on that family. They already, the family is going to be emotionally burdened, but then there's a financial burden if your income is not coming in. So one of the things that if you say family is important to you, one of the best ways you can do is protect your income. So let's
Mm.
look at how we can protect your income. You know what I mean? So one of the things I want to talk about income protection. What do we need to do to protect your income to make sure if something happens to you, just in case? We don't want anything to happen to you, but
Yeah,
we know, guess what? Especially in this COVID,
bruh. I
hey,
think the worldwide death toll is up to 500,000 or something like that.
right.
500,000, bro.
We already knew at any time, any given thing can happen. But on top of that, that's even more real now. So what do we need to do to protect that income to make sure? And like I said, family responsible. You want to be a responsible person. You want to take care of that, right? Now, you may say, okay, I want to and here's how I say, okay, what are things that are important to you? So you said taking care of the family. Now, do you want them to live in the house? Yes or no? If something happens to you, you want them to have to worry about that, right? Okay,
Hmm.
so guess what? We may look at what's the mortgage if you have a home. Do we want to protect the mortgage, right? So if you protect
Definitely.
the mortgage, how much is that mortgage? Okay,
And
how
then you
much
look at that over a period of 10, 20,
yeah, how
whatever
much
years.
you have left on it, right?
Yeah.
We could, if you want to take care of that, we can take care of that. The funeral expenses, that's easy. You look at
Yeah.
funeral expenses today, how much are funeral expenses?
Which is what I think most people think of first and foremost. They like, okay, if I'm not here, then somebody's got to pay for the funeral.
Right,
Somebody's got to pay for the burial. But they don't think about, well, your income is now
gone,
missing
gone.
for however long your family's still here.
Right. And so
So,
that's a big factor. And then so you got that, you got the funeral expenses, but then what about, like I said, you have a little guy. Do you want him to have education? How much education do you want to pay? How much do you want to contribute towards that? Do you want him to look at that? So guess what? If you have income, you have the education. If you have the education accounted for and taken care of, so these are things I'm like, okay, think about this. How do we want to take care of this? What do you have in place now? Okay. And then we come up with that number. So we're looking at that number, right?
yeah.
And then we just start working at it. Okay. How do we address this? Guess what? We may have to have, like I said, a layered approach. It would be nice maybe if you come in thinking, hey, somebody told me whole life. They're like, oh, whole life that's the only thing. You look at the price tag. What is it? Is that affordable? Maybe, maybe not. Right? But what if we can take care of that? Some of that with term, some of that with whole. Because if you think about little guy that you have, your little man, how long before he becomes an adult? How long before the mortgage? If you take care of that, that may just be a term. That's a time period. That's like immediate short-term needs. That can
Yeah.
be addressed with a term policy, right?
Yeah. Like the house, like, typical, most people get a 30-year mortgage.
Even though
So if you,
I really want them to get a 15, but like I said,
even though we want them to get a 15, even if you got to refinance 2, 3, 5 years into it, get a
right,
15. But you got that mortgage for 50. Let's say you got that mortgage for 20 more years. That's where I think, like I think you and I, you kind of school me on where a term could be beneficial if you don't have the money for a whole, because if you get a 20-year term and you got 20 years left to pay on your house, now at any point during you paying off this house, if you were to, be gone, you good. And then at the end of that 20 years, you don't have to pay the term anymore. You don't have the insurance, but now because initially you set up the term for your house payments, now you don't have the house payment either. So that particular policy
that most people have, the biggest expense have daily. What's expense is that mortgage, right?
Yep. Mm-hmm.
So you at least were able to take care of that.
So if you weren't able to do nothing else, you could have got a 20-year term, and for the life of the time that you was paying the mortgage, if you left the earth, then that's a start right there. If once you finish paying it, and then let's say you do run out of insurance because now you don't have your term, you didn't set up a hole, but at least now that you knew that whole time that you was not going to leave your family in the bind. Again, back to generational wealth. You got to start by not leaving your family debt.
Right.
Like that's the first and foremost.
Right. Because like I said, typically you have the opportunity because you have the knowledge. You can leave your family with that. Like I said, a debt, a gift, or an inheritance. And if you and most, like I said, too many of them leave with debt, so you're starting behind. So you never get ahead, right? So everybody's starting either at zero or you're starting behind, because no one, sacrificed. No one said, hey, let me think about this. What could I do? But just imagine if someone said, hey, I'm going to leave behind even 10, 25, 50,000. I mean, if you had
whatever,
that could either put money towards a home or it depends on the amount. You could buy a home, you have the home. There's so many things that would make a difference, right? Instead of starting, you continue, you always starting from behind.
You're right. And what's funny is I told you I watched the I Am Athlete podcast. They talked about that as far as getting drafted. They was like, who's the first, they was like, as a man, you want to take care of your family, meaning you want to take care of your wife and your kids, your grandkids. You want to pay it going forward. But what's the first thing you do when you get drafted? You have to pay it backwards. You get your mom a house. You get your dad or whoever took care of you. It's like even on that level of money, because we're starting behind, we're paying it backwards. And, and like you just said, you want to be in a position where you can pay it forward so you can leave a gift or leave some inheritance, So I'm like, that happens on all levels. It doesn't matter whether you work, at McDonald's or you're getting drafted. It's like you want to get to a point where you can leave something when you leave the earth.
Right. You want to leave something to the generations behind you. Now, like I said, I understand, you have people that have helped you out. You got mom and everything like that. But like I said, what you need to think about is how do we progress, right? And if I'm taking care of those that are going to be behind, then that's how you're going to progress.
Yeah. Okay. So
you're investing in the generations to come.
That's right. And then again, back to what we started with home ownership and life insurance. The two things that, just to be completely honest, you could be living check to check and have both of those things.
You could, yeah.
You could be. I mean, we're not advocating living check to check. We don't want us to do that. We want to have that emergency fund, whether it be 1 month, 3 months, 6 months, a year, whatever it is. But because I don't want us as black people to think, well, generational wealth, man, I'm just waiting for the next check to come in. Right. But with every check, we go out, like, just think about it. The normal person, they waste money on going out to eat, like, $40 a month. That's a good number. That's a good number. That's a good number. That's a good number.
Hey, I'm saying, I hate it when they say at my house, they're like, oh, let's go out and get something to eat, because that's automatically, a $40 drop.
I was about to say, it's you, the wife, and the 3 kids. Yeah. So even Chick-fil-A is $40. Right. You know what I'm saying? Yeah. So with that, it's like people's like, well, I can't afford insurance or I can't afford a house. It's like I said, I don't want you to live check to check, but even if you are, you can afford insurance if you don't go to just for a family of 5. Cut out that one trip to Chick-fil-A. Right. That could be your insurance. Yeah, one trip a month, that could be it easily. And I always tell people, like, if you think about this, sometimes you go to the grocery store, I know, and I'm sure they have it, where they ask you, do you want to round that up? And if you round it up, if you were to round up every time you went to the store, if you did that for a whole year, that would pay for a life insurance policy. That changed. True.
don't think about that. Like, let's say you paid $4.30 for, something you buy at the store. If you take that 70 cents every time you go to the store, if you were to save that, I guarantee you that would be enough a lot of times for a life insurance policy. If you save that change, you can buy a policy every year. And then I tell people, like, one of the ways, like, people say, oh, I can't afford it. Like I said, it's crazy because people will buy everything. Like I said, whether it's Starbucks, whether it's Chick-fil-A, whether it's, like I said, the new shoes, the new J's, and I had a guy, he was telling me, yeah, I got to get these J's for my kid. And I was like, okay. But just think about that money, right? And, how long can kids wear shoes a lot of times? And you buying J's, and I get it. But
and it's not that we saying that don't buy the J's,
oh, no,
but
I'm
if
saying
you buy and see, people don't think about this. Like with J's, let's take J's for instance. Even if you hit them on retail, they between 190 and 225.
Right.
And listen, that's a whole nother podcast. But J's, they release 1 or 2 J's every Saturday.
Right.
But let's just say you buy your son, because if they anywhere in school, whether it be first grade to 12th grade, their feet could be growing. You could be buying 2 pair of J's a year minimum.
Oh yeah.
That's $400.
That's easy.
If you buy your son J's, most likely you probably gonna get 1 pair.
Right.
So now you got $600. Not saying not to buy J's, but how about you buy 1 pair of J's? You don't get no J's. You get some, I don't know, you get something else, some other Nikes.
I always say it's like this, and you hear this word diversify, right? And that's in every game, not just, in life, but if you look at every game that's out there, you don't want to put all your eggs in one basket. You want to put things in different places, right? So you want to invest some, you want to spend some, you want to say some, you want to do that. You just don't want to say, okay, I'm not even get started. And that's where most people make a mistake. They don't even get started. And I tell people, okay, what's your gross income? I don't care what it is. Let's say it's 20, 30, 40, 50. I don't know. What's your gross income? What's 2% of that?
Right.
Okay.
Even if it's 20,000, 2% of 20,000, you good.
Now, can you afford to, that 2%, can you afford to not have that? Would you miss that? Most people would be like, nah, that's nothing. I will miss that. Now, even if somebody says it, I say, okay, how about 1%?
But even if they said 2%, I will, because I only make 20,000 a year. Well, take out the 2%. The 2%, you look at it like, okay, well, what do you spend monthly on food? I mean, because the reason why I go to food is because, but not even groceries. People think, well, I only spend such and such on groceries. Well, what about the time you stop by the gas station, you got a bag of chips and a soda, and then you got, $10 here, $10 there. It's like, how much do you spend on food? And I guarantee you, if you look at your food spending, somewhere in there, you can afford life insurance.
I mean, most people overspend on food every day, right?
Yes.
And I try to do things even with my kids now. Like with my kids, I say, okay, hey, I'm going to give you $10, okay? And I'm going to give you the option. If you have $10 that I give to you, and they're young still, I'm like, you have the option to do with this $10 however you want. You can go to your favorite food place and have one meal, or you can buy groceries and see how long it lasts you. Let's see if it'll last you. Let's do a competition. Let's see if it'll last you 3 days. Let's see if it'll last you 5 days. How long will it last you? And then they say, okay, I got the option now. If you think about it, if they spent that on one of their favorite meals, then what would they have to eat the rest of the month? But a lot of times we don't even think about it. We just spend it. Like I said, we overspend. I mean, you think about, and I was thinking about this, chicken tenders, right?
Yeah.
How many chicken tenders could you make if you went to the store and bought a pack of chicken for, I don't know, $7? How many chicken tenders could you make?
If you go on Tuesday to Fresh Market, you can get 2 pounds for $7.
Right. So I mean, you could eat that for a minute, right? Versus if you went to the fast food place, you got it. That's one meal that was gone, and you might be hungry within 3 hours.
You will be.
So it's all about how you look at the money, and like I said, the money is there. A lot of times, it's just a matter of planning the money out. It's a matter of being really deliberate about what this is important, because
I think that's it.
Yeah.
I think being deliberate as far as, with your money, because like you say, the money is there if you need to get it life insurance. The money is there eventually if you want to buy a home, but you got to be deliberate about planning your money, budgeting your money, saving your money. You can't just be like, well, I'm gonna save, so when I get paid, I'm just gonna pay my bills and I'm not gonna spend nothing. You gotta come up with a plan. You gotta like, I'm an Excel guy, so I put everything in Excel.
Okay.
Some people write it down, some people keep, notebooks, however you do it, whatever kind of software you're using or your phone, there's apps for that or whatever, but you gotta plan it. And I think what helps me personally, like what I do is I budget out for a year.
Okay.
So now I know how much every check, I know how much is going out, how much I can save, how much I got, and I tell my wife, if she say, okay, well, let's go to the beach. All right. Okay. Well, how much it's going to cost to go to the beach?
Right.
Of course, when she first got with me, she used to say, she wouldn't tell me I was cheap. She wouldn't do that. She said, you're very frugal.
Right. That's another word of saying you cheap.
My nephew, they always be like, oh, you always find a deal on something. Like, why pay full price if you aren't to? But, I digress. But, so I tell her, okay, how much it's going to cost to go to the beach? Let's say, we go to the beach. It's going to cost us $1,000 for me, her, and little man to go to the beach. If I put that $1,000 into my budget, I can see how it's going to, on February, I can see how that's going to affect me in December.
Right.
That's what I was like. That's why I try to be, like I say, being deliberate with my money. Like some people say, okay, well, I got $2,000 in the bank. All right, let's take that $1,000. Well, I want to know when I take that $1,000 out in December, if I don't make any more money other than what my budget say, how is that going to affect me? And if it's going to affect me negatively or what I consider negatively, and I'm like, we're just going to be going to the backyard this weekend.
Yeah. And here's something I want you to think about too. There's something, because like I say, some people, they're like, man, I ain't going to do no budget. I ain't going to do it. Here's something I want you to think about. Okay. Let's say if I put an ATM in your house right now, right? And the ATM, I told you, this ATM is going to spit out $1,000 every week, right? Now, if I said I'm going to put this in your house, it's going to spit out $1,000 every week, okay? Now, would you try to do everything you can to protect that?
Most definitely. I would.
But why don't people buy life insurance?
Like I said,
because that's the same thing, that you are that ATM that's in that house, and you spend out, like I said, whether it's $1,000, $2,000, I don't know how much, but you spend that out every week.
So, we can dive deep into why people don't do it, because I mean, my personal belief is people make time and spend money on what they want to. So, like if somebody says, "Nah, man, I can't really hang out," we want to get together with the fellas. I can't hang out. If I give you a certain amount of time, 6 months, whatever, if you really want to, you can make the necessary, if I say, Casey, me, you, and, we're going to do a fellas trip next year. It's going to cost everybody $1,000. You're like, well, I don't even really be having that much money. But if you really want to go, you will make the necessary changes to go to save that $1,000. So with life insurance, I think people think, I hate to say it, but even people full of faith, even Christians that know we can leave. I could be talking to you right now, and it could be over. Right. But we always think we have more time.
Right. Now let me ask you a question. You protecting your family, does that feel good?
Oh, most deaf.
It feels good, right? But here's the thing. A lot of times, I think this is another thing too, especially, people sometimes they buy things. And like I said, they have that immediate feel good. Like, okay, I buy that chain.
Instant gratification.
I buy that polo, right? I buy that whip and I pull up, right? And, that's a whole psyche. And that's a whole nother thing. I think sometimes it gets into it. But you're like, if you really thought about it, man, that's a really good feeling knowing that I've taken care of my family and protected. I don't know if everybody thinks about that either.
Yeah, I mean, it's because, like you had said earlier, and you just mentioned it, but you said earlier in the conversation about instant gratification. Like, you want it right now. Like, some people don't want to save for a house, don't want to purchase life insurance, because if I got an extra $1,500, this week on my check, I put $1,000 that way, and then $500 I'm putting in an emergency fund, but $1,000 is for the house. I got $1,000 there, but I can't really see. I can see it in the bank, but that's it. That's I can just see the number in the bank. I ain't got no house right now, and it's like I want it right now. It's like we as people, we in a society, we a microwave society. We want it right now.
Gratification, microwave.
Yeah, but so you got to think of it long term. It's like you can take like when we was getting ready to get a house. I told my wife, I was like, we love to travel. It doesn't matter if weekend in Atlanta, Charleston, or going to Vegas or California. But I was like, that's short term gratification. Once we come home, we already know how it is when we come home from vacation. Like, I need another vacation before I go to work. But it's over. It's like, well, however much fun you had, it was some memories and that will last, but it's over. And it's like we can have a whole bunch of short-term gratification, or we can sacrifice for a period of time.
Right.
Period of time. And then we can have some long-term gratification. It's like, it's hard. It's, you give up something, but.
There's nothing, I guess, they always had a saying, there's nothing worth having that doesn't require some work, right? So even losing weight, even like you think about something like you talked about earlier, losing weight, it's not like automatically it's just going to happen, boom, right?
Yeah.
So there's some sacrifice, there's some work that's got to be involved, you know what I mean? And I think that's the thing about it. Like you said, we just have to say, okay, this is important to me. I can put my family in a better situation. Let me make sure that, that sacrifice, whether it is, hey, not going out for drinks that Friday, or whether it's not buying an extra meal or buying that watch or, whatever it was, that vacation, let me sacrifice a little bit. And that's going to make sure that my family is taken care of.
And in the last couple of years, I really come to terms with like what I most want to do. Like a lot of what I most want to do, other than being a man of faith, is being the catalyst to start the generational wealth. And I know personally that's gonna mean not a lot of. I'm not gonna be able to see a lot of gratification from that. Like I'm not. Some of that stuff I won't even be here for. Like, my grandkids, I got 2 grandkids, and then, their kids, I may not be able to see that, but I'm okay with that. And I think I want us as black people to, especially those that don't already have it started, somebody has to be the catalyst. Why not you? So that's where I'm at with it. And hopefully, there's people in your family that you can be around or in your circle, whether it be family or friends, that think the same way, because, birds of a feather flock together is what they say. So, but that's just what I think. That's not my only mission in life, but it is one of the most important missions in life. And I can say, honestly, in my 30s, I definitely didn't think like that. I just was like, I need some insurance so I can pay for the funeral. But then I was like, cremate me, so it don't even matter.
Right. But like you said, when you know and you learn, it's just a matter of applying and executing, like I said, and then you give that same knowledge to, like your children and your grandchildren. If everybody does it, then like you said, every generation, we want every generation to be better and do better. And that's a good way to do it. Like I said, because you own things, right? Then you start owning your houses, right? And you have, a better advantage because of that. Like I said, you're not starting from zero or behind.
Exactly. So when it comes to generational wealth, we want y'all to start thinking about just starting somewhere. And like I said, 2 of the things that I think not necessarily easy, but things that almost everybody can take part in at some point is homeownership and life insurance. And if you don't know about life insurance, I'm going to give my man at least how to contact somebody. If you don't have a agent or whatever, if you're in the state of Georgia or life insurance state of South Carolina, and maybe, expanding out later on to some car insurance and other homeowners insurance. I don't know if you'll be able to expand in South Carolina for that kind of stuff, but I'm going to give you a chance to say where you are, how to contact you, and things of that nature. Go ahead.
All right. Well, I appreciate the opportunity. Like I said, I'm a State Farm agent. My opinions and the things I share are their mine, though. They're not the company's. But I will say that if you want to reach me, it's easy to reach me. You can reach me on all platforms. I'm on Facebook, Instagram, LinkedIn, so it's not too hard, not too many Kermit Walkers out there. You can find me that way. Also, you can call the office, 678-804-9982, or you can contact Isaiah. Either way, however you want to get in contact with me, not too hard to find. Anything I can do to help. That's what I want to do. I want to see, whatever I can to help. That's part of my mission too, to make a difference. So.
All right, well, we appreciate you coming in here with one of the local dudes and guys down the street. Y'all stay tuned for the next couple of episodes. We'll keep diving into generational wealth and where to go from there and how you can start, be that catalyst for your family. Don't forget to comment, like, and subscribe for Kermit Walker and his State Farm Agency. I'm Isaiah, guys down the street.
We don't got this gon' eat. We don't got this gon' eat. See, right here we talk fast. It's real talk, we gon' speak. See, right here we talk fast. It's real talk, we gon' speak. We don't guys on the street. We don't guys on the street. We don't guys that's gon' eat. We don't guys that's gon' eat. See, right here we talk fast. It's real talk, we gon' speak. See, right here we talk fast. It's real talk, we gon' speak.